Hi guys, I'm Michael here, and today is the video about showing and applying the scalping strategy. So basically, I will show you on real market with the real money on real account how to, properly approach the analysis of charts and to determine your entries, take profit and stop losses. So basically this will be based on a very simple technical analysis with the usage of very simple tools such as Fibonacci retracement levels and the stuff like harmonic patterns, etc. So very basic stuff. Therefore, maybe let's start from the stocks that we will be talking about. First one is Inovio. It's a pharmaceutical company. From the chart, you can see that currently it is a big downtrend, we can say. And currently, maybe as for the fundamentals, there isn't nothing too, we can say, optimistic. They are still lagging behind the other competition companies such as Moderna as for development of the vaccine to the most popular disease of the globe currently. So you know what I have to I mean. That's the first thing. And as for the second company, give me a second. Second company is PepsiCo. We all know what it is. The soda drink. Apple. I think I do not have to tell anybody. As for the what this company do, Google also, Alphabet. As for the name, the GOOG is the ticker, and Okta company. Well, guys, as for the Okta, what do they do? Turns out that they connects any person with any application or any device. It's an enterprise-grade identity management service built for the cloud but compatible with the many on-premises applications. With Okta, IT can manage any employee's access to any application or device. Okay, so the mystery is solved. And let's start from the Inovio company and quickly let's dig down what I wanted to show you at this current chart. So first let's maybe zoom in a bit, zoom out. Okay, it should stay like that. So first let's measure this whole upward movement with the Fibonacci tool, and first that comes in mind after seeing such a pullback, we can say, at this moment where the price bounced off, which is 88.6 Fibo level. So basically, if we check the left side of the chart, we see that the price bounced very well. We can say behave very well at the 50 level, therefore suggesting for us that here might be created a harmonic pattern, classical harmonic pattern with the point B at 50 level and point D at 88.6, from which we started moving to the upside. Therefore, here we could enter the market, and even at this stage, because the first take profit is at the level of 50, which is a point B. So more or less, this is our potential move to the upside. So as you can see, if we check the price range, we could have it's up to $8, which is 10 pips. And as for the downward move, so where potentially we could set our stop loss, is around 7 pips. So it is not ideal risk-reward ratio, but hey, this is still more than 1 to 1, so we are risking less than we can potentially earn. So the math still is on our side. And as for the volume, It has a small contract size, so I guess 30 lots will be okay. So let's place an order. So we have buy transaction, 30 lot size at the current price, and now let's set our take profit. Okay, and now let's set our stop loss, which is right below the prior entry that we digested. So as for again so for those of you who have hard time to visualize the harmonic pattern, it is right over here. So here we have the X, the A point, B here or here, C here or here. It less matter, but here is the most important. Price bounced from the 88.6 beautifully, almost to the pip, signaling us that it is a good entry level. So if you will draw lines along with those points, you can Google harmonic patterns, you will know what I have in mean. So that is as for the Innova company. Next is Pepsi, and here we have another example that we were discussing previously, which are chart patterns, candlestick chart patterns. So which chart pattern do I see here? And right here we can clearly see an ascending triangle, but not the most beautiful case that we would want to see, but still a very good example to showcase what might happen to you on the real market and how you should interpret the price movements. So clearly we can see the ascending triangle because the price range was getting tighter and tighter until we break from the formation. But the price reversed, retested the level, and even after retest, they make spike to the downside, causing a lot of stop losses to being triggered. Therefore, a lot of traders were out of the position right now, out of their longs after setting their longs on the chart on this particular stock. So I think after such a breakout, and therefore it is a good signal to re-enter the market again, because most likely the price will follow in the correct direction, we can say, which is the upside move to right now. So as for the left side of the chart, we can see that here we also had kind of a triple bottom with a little bit of slope. It was not symmetrical, with a little bit of slope. So you can see it's a, let me zoom in, that one. First bottom, second bottom, third bottom. And here we can say the line after which is broken, retest and move to the upside, reverse move. On top of that, it was this formation was placed at a very strong support, therefore suggesting a strong possibility of the reversal move. So that's as for the Pepsi. Then let's place a trade. We have 150, 160. As for the stock price, let me tell you how much we took. 5 lots as well. As for the potential stop loss and take profit, one thing that comes in mind, to put it below this previous pullback, this previous, we can say, resistance. After we got this kind of spike, it would be really hard to get another one like this, and so that our stop loss would be triggered. Therefore, there is a lower chance for that kind of scenario. Therefore, it could it allows us to have the stop loss a little bit tighter, therefore having a bigger, better risk reward ratio. So if we had this stop loss at that level, which is 8 pips, so we can even go for 3 to 1 and have 24 pips as for the take profit. So let's set 24 pips from that moment, therefore setting the risk reward ratio. And as for the risk reward ratio, also you can check this channel, previous videos. I made also a video about the risk reward, why it is so important in trading. Because it allows you, in a nutshell, it allows you to have less stress on the market, to, you know, it lets you win on the market even with the low win rate ratio. So you don't even have to win more than half of your trades to be profitable with such a high risk reward ratio. So next one is Apple, which is a beautiful example again of head and shoulders. And currently I am on Apple, on long on the Apple. I went on the 1st of October, which was over here. So we can say I bought the dip. Either way, it is about the monthly project with monthly portfolio. I made also a video about it. I am making an updates about this portfolio. So basically I choose 4 stocks based on a strict, we can say, conditions, on strict parameters to choose the stocks for the monthly portfolio, and four stocks that are, we can say, based on, I don't know, how do I feel right now, and yeah, more or less with a toss of a coin, and just chosen by like a sheer luck, a sheer lottery, to compare how those portfolios will perform comparing to each other. So basically, is it worth to make a double diligence analysis and put time and effort into making such portfolio, or you can just more or less read the article on Yahoo Finance or something like that, other service, and based on that make a decision. So that is an interesting experiment. But yeah, let's go back to the chart. So as I said in the beginning, we have the head and shoulders, right? This is H1 time frame. Maybe go for H4 and zoom in, it will be better visible. So you can see left shoulder, head, and right shoulder, and here is the neckline. So I was in the market before this even formed, but that doesn't matter. It was based on other criteria. So let's check the neckline, and based on that, you can beautifully see that here it worked out pretty well. So you have left shoulder, and right shoulder, the neckline, and after breaking of the neckline, retest, perfect retest of the line, and then rally to the upside. So if you, for example, would be at this moment on the computer, you could enter the market and already be in profit. But I wasn't even taking the positions, taking it into account, because I am already in Apple. It would not make any sense, so it would just increase the risk at one asset. So let's go further. Let's go for the Google, and with the Google, the same situation. And as for the fundamentals, for example, for Apple and Google, I don't need to talk about it anymore, because I made several videos about that, about the tech stocks. So I will not dig down into it. Let's just talk about the chart. But as for the chart itself, we can clearly see that we have the head and shoulders formation, and which is created on pretty strong support right over here on this zone, therefore suggesting us that there is a high possibility that this formation will work out properly. So what we should do, digest where is the neckline. It would be our entry. We are a little bit late to the market. Therefore, it is not good for us because our stop loss should be below the neckline, because the neckline would be our point when where if it would be broken down, retested and broken down to the upside, therefore it would suggest us that the plan didn't work, it was rubbish, and I need to think about something else, because most likely the price will follow in the other direction. So Google has a very high price, therefore the contract size is very high, so I need to take just one lot to keep the risk inside. So where to after taking a trade, we need to think about where to place a stop loss. So ideally, when we would enter, maybe somewhere over here at the candle which broken this formation and suggested the upside move, we would be safe somewhere over here, because the moment where the neckline is broken is the best moment that would suggest us that this formation just didn't work out, the plan was rubbish, and we need to think about something else, because when the trend line would be retested and broken down, yeah, that would be the case. But right now we are a little bit higher, therefore we still need to keep the risk management intact. So in such scenarios we need to look for another closest place, good place to set our stop loss. And right here, what we have here, we have, maybe let's, no, I think this should be enough. So we have places like support and resistance, and the nearest support is, we can see, over here. You see here this level, here this level, and if we would be not so detailed, here as well was a strong support level, therefore suggesting that we could place our stop loss more or less at this level. And if we want to set the take profit, risk reward ratio again 2:1. So here we have how many pips, 40 euros almost profit, therefore let's make 55, 40, 55, so it would have to be 60. Okay, let's set it on 62. It doesn't need to be to the pip. 62 to have at least 1.5 to 1 risk reward ratio, therefore we are risking less than the potential profit. So let's go for the next stock. That is basically, as for the Google analysis of the Google stock, let's go for the Okta company. And yeah, if we check the chart, we can see that basically the price of this stock is in a sideways move. There are some fluctuations to the upside, to the downside, but overall trend is showing that the price range is basically getting tighter and tighter. As you can see, we are creating some kind of a triangle from which we will have to break out either direction. So that is a bigger picture. If we zoom in on the chart and measure this whole move to the downside, to which this upside move is a correction, right? You know the Elliott, this upside move is a correction to this move, and so on. So we measure this downside move and we see that the price broke through the 50 level, broke through the 61.8 level, which is even more important level, and it stays above 61.8. So as for the recent trading session, we can see that from 1 hour time frame that here we had this bullish engulfing candle which engulfed this whole retracement. We can see that the body of this candle engulfed all of this prior move. Therefore, it would suggest us that the continuation to the upside will begin, and we are starting to seeing this kind of potential. So that's the first thing, that we are above the 61.8 Fibo, which is the most common level where the corrections are ending, 50 or 61.8. And if we are have broken this level, we are staying above that level, and the candlestick patterns suggest us scenario to the upside, we have a green light to enter the market. So let's choose 5 lots for this one. Let's enter. And right now we need to digest where to set a stop loss and a take profit. So the most common thing what we can do, set below this small retracement, which is 32 pips. And as for the take profit risk reward ratio, so in this situation, let's zoom out the chart. It would not be any all-time high or nothing like that, so we can without a problem set 2 to 1 risk reward ratio, therefore giving us good profit compared to the risk we are taking. So it was, once again, let me check, 32 pips, so 64 pips, 2 to 1. Okay, so you can see that that is my real account. Here are those trades from the portfolio. Here are the trades that I took today. You have the time and hour of the opening, the tickers, and I will share the results in the next video, or I will publish them if they would come to an end. Those trades would hit the stop losses or take profits, either way, sooner than expected. Then I will share it on Instagram or TikTok. So be sure to follow LiteFinance over there too, to have more of such content. So that is all for today. Thank you for watching, and see you on the next one. Take care. Bye.